So we get that question a lot about why more and more investors are turning to private real estate for retirement income. In our opinion, this makes total sense because the classic mix, 401k, bonds, and CDs, doesn't always deliver predictable and inflation-resilient cash flow on its own. And I would emphasize the inflation-resilient portion, especially in today's market, or at least the last 2 years. Volatility on the equity side, duration risk on the bond side, and after-tax yields that can lag inflation have a lot of investors looking for steadier income, definitely. In today's environment, smart portfolios are adding alternatives to fill that gap. There are plenty of recent studies showing how institutions or institutional investors average about 25% of their portfolios in alternatives versus roughly 5% for typical retail portfolios. So individuals' portfolios only have about 5%. Institutional investors are already having 25% of their portfolios in alternatives. And the trend is moving even higher as access to solid alternatives improves. It has been proven that adding, even if it's a modest real estate sleeve to a traditional 60-40 split strategy, improves the risk-adjusted return and added income. The appeal to this route is, in my opinion, or at least the main appeal is predictability, inflation resilience, and passive cash flow. Rents are diversified across tenants, leases typically reset every year, and professional managers do the work. So they're basically, you're not the landlord, you're not dealing with the day-to-day operation. Mechanically speaking, in a properly structured vehicle, the manager sources and underwrites the assets, handles capex programs if needed, and the operation itself, and pays investors on a schedule with transparent reporting. That's our approach. Apex Infinity Fund targets precisely that, a diversified income-producing real estate portfolio, in this case in the Atlanta market, and offers fixed returns with bi-yearly distributions and an 18-month lockup period only, so investors can plan cash flow without taking on landlord or development risk. If you rely on a 401k and a bond ladder, consider how a structured real estate allocation can complement that plan, and that's usually our advice. We think adding predictable, inflation-aware income while keeping it truly hands-off is key to a smart portfolio.